Ladies and gentlemen, good day and welcome to Welspun Living Limited Q1FY26 earnings conference call hosted by JM Financial Institutional Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touch-tone phone. Please note that this call is being recorded. With this, I now hand the conference over to Mr. Ashutosh Somani. Thank you, and over to you, sir.
Thanks, operator, and welcome everyone to the call. I will first thank Welspun Living for giving JM Financial the opportunity to host today's call. Without much ado, I'll hand over the call to Mr. Salil Bawa, Head Investor Relations, Welspun Group, to introduce the management. Over to you, Salil.
Thank you, Ashutosh, and good evening to all of you. On behalf of Welspun Living Limited, I welcome all of you to the company's Q1FY2026 earnings call. Along with me, we have with us today Ms. Dipali Goenka, Managing Director and CEO, Welspun Living, Mr. Sanjay Gupta, Chief Financial Officer. We hope you have had a chance to review the investor presentation that was filed with the exchanges today. The presentation is also available on our website. During today's discussion, we may be making references to this presentation. We'll request you to kindly review the safe harbor statement in our presentation. As usual, we will start the forum with opening remarks by the leadership team. Post that, we will open the floor for any questions. Once the call gets over, should you have any further queries, please feel free to connect with any one of us. With that, I would now like to hand over the floor to Ms. Dipali Goenka, Managing Director and CEO, Welspun Living. Over to you, ma'am.
Thank you, Salil. Good evening, everyone, and thank you for joining us today for Welspun Living's Q1 FY26 earnings call. We continue to navigate a world shaped by shifting global trade dynamics, evolving consumer sentiment, and persistent tariff uncertainties. Resilience and adaptability remain central to our strategy as we manage near-term challenges while preparing for emerging opportunities. The implementation of reciprocal tariffs between USA and India has created unpredictability in trade flows, impacting retailer and overall market sentiment and order patterns. While this poses short-term pressures, we believe it will drive structural realignment in global sourcing over the medium to long term. We continue to engage closely with our customers to navigate this transition smoothly. The US-India bilateral trade agreement remains under discussion, and we remain hopeful that a constructive policy resolution will restore clarity and stability in trade relations. Meanwhile, the India-UK Free Trade Landmark Agreement is expected to provide a strong impetus to India's textile exports, further strengthening our market position. With tariff barriers eliminated in home textiles from 12% earlier, Indian textile and apparel exports are well positioned to scale significantly in the UK market. Strategic product diversification, particularly in the underrepresented segments, can help maximize the benefits under this agreement. Decisions around India, EU interim FTA finalization is also a step in the positive direction for India. Highlights of the quarter gone by. The first quarter of FY26 was marked by uncertain global trade flow. Consolidated revenue declined 11.6% Y-on-Y to 2,289 crores, and EBITDA margin at 11.1%. This was primarily driven by softness in export business as reciprocal tariff implementation and uncertainty around timeliness created an overhang in the market. Both retailers and suppliers, including us, adopted a cautious stance, impacting volumes with retailers, inventory levels witnessing gradual correction. Core exports. Our core home textile export revenue declined 11.8% Y-on-Y to 1,885 crores, As uncertainty around trade policy continues, consumers could remain cautious and increasingly selective in their discretionary spending. Recently, the U.S. data indicates retail sales fell for the second straight month in May, while inflation accelerated to 2.7% in June, highest level since February, driven partly by tariff-induced cost increases further weighing on consumer demand. India continues to be the leading supplier of terry towels and bedsheets to the United States, holding a dominant market share of 45% and 59% respectively. As per Texa data for the 12 months ending May 2025, innovation continues to be at the heart of our strategy, contributing 27% to the revenues this quarter. High potential segments such as pillows, utility, and fashion bedding remain focus areas. Our Ohio pillow plant continues to ramp up efficiently, with capacity utilization reaching to 47%, positioning us strongly to capitalize on emerging growth opportunities within the broader sleep ecosystem. We are witnessing strong momentum with increased traction among retailers and greater shelf presence, strengthening our visibility and competitive positioning in the category, and expect to nearly double our pillow business in this year, as against $15 million in the previous year. We are further strengthening our pillow manufacturing capacity in US with setting up of a new pillow plant at Nevada to supply to customers in the West Coast. The board has approved today an investment of $13 million, 112 crores, to set up a pillow and TOB facility at Nevada with an annual capacity of 10.8 million pillows in 2-shift operations. The plant is expected to be operational in Q4 and would contribute additional pillow revenues of over $60 million at full capacity utilization. We are also actively pursuing geographic diversification and expand our presence in other key regions, including the UK, EU, GCC, ANZ, Japan. Our revenue share from the market outside of US has gone up to 40%. As global trade realigns, we remain optimistic about reinforcing our core leadership while scaling emerging categories through integrated portfolio, play, and scalable manufacturing. Emerging businesses. Our emerging businesses, including domestic consumer, global brands, advanced textiles, and flooring, continue to contribute 30% to our overall revenues. Branded businesses accounts for 18% of our total revenues, underscoring a strategic focus on building strong brands. Licensed global brands like Martha Stewart and Disney Home continue to strengthen our shelf presence with key retailers and open up new avenues. Christie continued to build on its premium positioning, growing in UK and US markets alongside deepening offline presence. Implementation of India-UK FTA further strengthens opportunity with our own and licensed brands to deepen penetration and expand distribution network alongside foraying into category expansion. I will now take you through the emerging business segments in more detail. Domestic retail. In line with our anticipation of a rebound in consumption, we witnessed visible green shoots in retail activity during the quarter. Our domestic consumer business grew about 10% Y-on-Y to 134 crores, reflecting improving consumer sentiment. According to the RBI, private consumption remains healthy with a gradual rise in discretionary spending. Rural demand is steady while urban demand is improving, supported by expectations of an above normal southwest monsoon and sustained buoyancy in services activity. Additionally, CPI inflation moderated to a nearly 6-year low of 3.2% in April 2025, led by a continued decline in food inflation, which should further support consumption trends. We remain focused on strengthening our leadership position in the Indian market by leveraging our global expertise to offer differentiated products and superior brand experiences. The organized home textiles market is expected to outpace overall market growth at a 9.3% CAGR. Brand Welspun continues to play across affordable and aspirational segments, driving the shift from unorganized to organized retail, and grew at a strong 15% in Q1FY26. Our B2C business performance has been improving over the past 2 to 3 quarters, growing robust 16% Y-on-Y, further strengthening our brand play. During the quarter, we added 3 new FOFO stores, taking the total count of EBOs to 48. On domestic flooring front, we witnessed a robust performance, growing 26% Y-on-Y. In Q1FY26, on the back of strong growth in residential and hospitality segments, the business is inching towards EBITDA break-even. We have deepened extraction with existing dealers and added new partnerships into top-tier global accounts. As India's housing market expands, supported by higher GDP, urbanization, and a preference for premium offerings, demand for innovative and quality flooring solutions is expected to accelerate. Flooring. Overall, flooring segment clocked a revenue of 194 crores, 15% degrowth Y-on-Y in Q1FY26. Challenges in the global flooring business were further accelerated as tariff overhang led to order holds and subdued demand. However, strategically, we remain focused on deepening our presence in U.S. home improvement and OEM channels, forging strategic partnerships across Middle East and ANZ, and leveraging the UK FTA to drive regional diversification and long-term growth. In our advanced textile business, our revenues declined by 11.6%, Y-on-Y to 117 crores in Q1FY26, impacted by a broader slowdown in U.S. customer offtake and tariff-related headwinds. We view this as a temporary blip amidst global trade uncertainties and remain confident in the long-term growth potential for this business, supported by strong customer partnerships, leveraging our innovation capabilities with a focused strategy to shifting towards offering value-added differentiated products in global markets. ESG remains a strategic differentiator for us. Our journey towards 100% renewable energy and 100% sustainable cotton by 2030 continues with commissioning of a 18-megawatt solar plant at Vapi and a 4-megawatt plant at Hyderabad this quarter. Additionally, we are targeting 47 megawatts of round-the-clock green power by year-end. Looking ahead, we expect Q2 to remain challenging with sustained pressure on both top line and bottom line. Given the continued uncertainty around tariffs and trade policies, we are closely monitoring the evolving landscape. Our priorities remain on prudent cost management, operational agility, and deeper customer alignment to navigate these headwinds effectively. At the same time, we are strengthening the foundation for future growth. With this, I would now like to hand over to Sanjay to take you through the detailed financial performance for the quarter.
Thank you, Deepali, and greetings everyone. I will take you through a brief overview of our financial performance for Q1 financial year 26 before we open the floor for questions. During Q1 financial year 26, we reported consolidated quarterly revenue of 2,289 crore, down by 11.6% year-on-year. Our EBITDA margin for Q1 of financial year 26 stood at 11.1%, down by 409 basis points year-on-year. Our margin compression is primarily driven by operating deleverage arising from lower volumes. In response, we have adopted a conservative stance, intensifying our cost optimization initiatives across businesses to ensure continued operational efficiency without compromising on our serviceability and quality. Profit after tax after minority interest for the quarter is at 88 crore rupees, down 52.8% year-on-year. Consequently, our consolidated EPS for Q1 stood at 0.92 rupees per share, down 52.3% year-on-year. On the forex front, our average exchange realization for the US dollar during Q1 was 85.09 compared to 84.05 in the corresponding quarter last year. We have focused on strengthening our balance sheet. Net debt stood at 1,401 crore versus 1,603 crore last quarter, lower by 202 crore, and versus 1,562 crore last year, same quarter, lower by 161 crore. Our cash conversion cycle has improved, reflecting better working capital management. During the quarter, we have incurred a capex of 83 crore rupees out of 200 crore guided earlier in the Q4 towards various capital expenditures. The board has further approved a capex of $13 million, which is about 112 crore rupees, towards setting up a pillow and TOV facility at Nevada, USA for the year. Segmental results. Q1 financial year 26 core business home textile revenues stood at 1,885 crore, down by 11.8% year-on-year, and an EBITDA at 12.6% compared to 16.9% last year. During Q1 financial year 26, revenues from flooring business was 194 crore, down by 15%. EBITDA is at rupees 16 crore, which is 8.4% as compared to 9.2% last year. However, domestic consumer business has showed resilience with 9.5% year-on-year growth. With this, I will now leave the floor open for question and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question comes from the line of Prerna Jhunjhunwala from Elara Securities. Please go ahead.
Thank you for the opportunity. First question, I just wanted to understand the demand scenario in the US, like how the inventory position of the retailers is, how pressed they are to source from their dominant partners, and what is the kind of tariff sharing expectations they have, given that the tariff rates are actually very high against expectation after a deal also for various countries.
So hi Prerna, thank you for your question. So definitely there has been a decline in the volume, and the retailers this time are correcting the inventories as well. So that is one thing that they're doing. Secondly, everybody has been very cautious. For example, this time the top line also grew because a couple of promotions actually got held on by the customers as well. So that's why. So inventory correction is happening. And the other thing is how, we are looking at the tariff situation is what everybody is evaluating. Now, the second question that you asked about how the tariff and the whole, the tariff is high and how is it going to be shared or how it's going to be taken forward. I think let me just tell you that the retail prices in America haven't gone up for the past 20 to 30 years. And now, obviously, if there's any kind of a steep thing that happens, it will be between the consumer, it will be passed on to the consumer, then the retailer. And of course, there's a partnership that works on, so there could be that kind of a conversation. So however, this is not going to be anything that can be taken by the vendor alone. It will be a shared between all the three kind of verticals here, Prerna. I hope I've answered your question here. And if you talk about the volumes going forward, it will now depend. See, now also the tariff announcement uncertainty is an overhang. It is just hanging uncertain. There's an uncertainty here. While having said that, with USA, we continue to focus on UK, Europe, and rest of the world, where our business grew by, our share is around 40%. So that's where we're also focusing and seeing how we can increase our share there as well, because that clearly will now establish an opportunity for India as well as ourselves.
Okay. And how do we see the margins then? Because this quarter we've done around 10% of EBITDA margins. And given that there is an expectation that vendors will continue to, share the impact of tariff, do we see normalization of margins even by the end of this year, or we continue to, remain at lower margins for some time till there is reduction in tariff rate?
So, Prerna, I'll tell you one thing. The concerns are there in the terms of the uncertainty of the tariff. Okay, let me just put it and table it there. And the top line definitely will be impacted, because now the customers are going to evaluate, what they have to buy very, very, they will be very, they'll take very conservative calls there. So that you will see there. And so that top line will also impact the EBITDA indirectly, directly, because that definitely will be an impact. So, however, I can also tell you this is a blip, momentarily. And in the year as we go forward, we will see that come back again, and we are working towards that. So while the tariff situation is getting resolved, we are also working on a cost, we are working on the other measures, other things, so that gets corrected till then. And these numbers are going to come back. See, I can just tell you one thing, Welspun is not here for today or tomorrow. They are here for the next 100 years, and we are building a legacy here.
I completely agree, ma'am. But just wanted to, my question was generally related to near-term performance. How long would it be? So, ma'am, second question on with respect to profitability, which I asked you. What are the challenges in servicing newer markets now? Because we have predominantly focused on US in the past. Now that we are focusing on newer markets, whether these markets can compensate for the growth that we are seeing challenge in the US over a period of years' time, or it will still be impacting our volumes despite focus on newer markets. I'm just trying to understand how much growth and margins that we can really see over the year.
Sure. So, Prerna, very good question indeed. So first of all, let me tell you one thing. So even when you're talking about the US tariffs, okay, one thing, let me be clear here, India is in a good position, apart from all the other competitors that India has and the peers that India has, right? So whatever will happen, India will be at a better position there. So the business opportunity still remains for India. So let me clarify that from the terms of USA and India, right? Now when you're talking about other geographies that we're talking about, Prerna, the opportunities are very good. And for us, we already started a penetration in UK and Europe, and that's where, we are seeing more and more opportunities. And Japan. Japan again is emerging so it is a re-emerging economy, let me tell you that. So again, that's a very important country that we are focusing on, and of course, there'll be ANZ and also the GCC. So USA is the biggest market of consumption. Let me be very clear. Let me not make any qualms about that. However, but this is again a very interesting geography for us. So while right now we are struggling with the tariffs for USA, where still I maintain that India will be in a good position, but we are continuing to make forays into this part of the world as well.
Okay. And what will be the revenue share of US in our emerging business, or advanced material and other businesses?
So I think we don't disclose anything, but I'll tell you one thing. Advanced textile, of course, America is a good market. So is Europe and UK and rest of the world as well. Yes, this time we got a little blip from the top line in the advanced textile as well, and also flooring, owing to the concerns about the whole tariff offtakes as well. So yes, that's an overhang on the tariffs as well. Yeah.
Okay, understood. Ma'am, I'll come back to the question queue for any further questions. Thank you,
Sure.
And all the best in the challenging situation.
Thank you, Prerna. Thank you so much.
Thank you. The next question comes from the line of Dipali Kumari from Arihant Capital. Please go ahead.
Thank you for the opportunity. I just have few questions, like the company has lowered its net debt compared to the previous year. So what is the internal benchmark or target for FY26? Should we anticipate any additional prepayment?
Hi, Dipali. So we have given a direction for our net debt, which will be in the range of about 1,300 to 1,400 crore for financial year 26. We have done quite well in first quarter itself, and we have reached 1,400 crores. So definitely we would try to top our guidance in this regard.
Okay. And like one more question, like your wet wipe segment have done good from last quarter, but it is only 24% of capacity utilization. even though you have 100 million of tax capacity. So is it due to weak demand, pricing issue, or problem in distribution?
No, nothing of that sort, Dipali. The thing here is that, with the US, where we had an opportunity, where that's the reason the business, people were just anticipating and they're holding on for the tariff. So that's where we are looking at it. Otherwise, the opportunities are not only in the wet wipes for, makeup wipes, but baby wipes, to the medical wipes, dry wipes. And so there are a lot of opportunities that we're exploring. A lot of innovation is being done here as well. So let me just give you kind of a comfort there that this is a category that we'll see to grow. Yeah.
Okay, so there is no any seasonal impact.
No, the seasonal impact is not there. This is a tariff impact.
Okay. And like your flooring business, at what level it will be a break-even?
Flooring business we are already at about 8 to 8.5% EBITDA margin. So it is already break-even has happened 2 years back.
Okay, so the newer facility I'm asking about.
Sorry, I didn't get you.
Like the newer facility you have talked about, at what level that will be break-even?
So there's no newer facility that we're investing in, Dipali. I think
it's in the pillow that we are investing, not in flooring.
Yeah, flooring means.
Oh, okay. Okay, that's it from my side. Thank you.
Thank you.
Thank you. Before we move to the next question, a reminder to all participants, you may press star and 1 to ask a question. The next question comes from the line of Param Vora from Trinitra Asset Managers. Please go ahead.
Hello. Thank you for taking my question. So what I wanted to ask was that with the overall revenue declining, but the domestic flooring showing a strong growth of 26% year-on-year basis, can we expect the flooring business to become a larger revenue contributor in the upcoming quarters?
So I think domestic flooring is a great opportunity in India as we see hospitality institutions coming up and the residential opportunity also continues to grow. And so while saying that, India will definitely be a good opportunity, but we also will be focusing on the global markets here.
Okay. Thank you.
Thank you. The next question comes from the line of Kunal Shah from Jefferies. Please go ahead.
Hi. Am I audible?
Yes.
Yes, sir.
Yeah. Hi. Thank you for the opportunity. So my question is, last 15-20 days you've seen countries sign trade deals, right? And at least for some countries, I know we don't compete with many of them, start to emerge. So just from a customer standpoint, have there been any change in conversations on how things will pan out in the company? I know actual orders and volumes and all those may take time, but any change in conversation or direction in the last month or so as these trade deals are starting to flow in?
So hi Kunal. For us as India and the other countries trade deals you're talking about, just want to clarify like UK and the other countries. I just wanted to clarify that.
No, I mean US signing trade deals with let's say something like Indonesia or Vietnam. I know we don't compete with them, but just from a customer conversation standpoint, any change or any anticipation that they have at their end on what's the next step from their side?
Nothing of that sort, Kunal. Let me also clarify. See, Indonesia's operations are very minimal, and I think that focuses on minerals that side. Vietnam focuses on other categories more than home textiles. So that again is a perspective that let me just clarify as well. So India continues to be a very strong sourcing arm. And definitely we will see how the tariffs pan out. But India will continue to be a very strong sourcing country for them.
Understood.
Yeah.
So it would be fair to say, let's say half of the issue is also the category itself being weak and the rest of it is the destocking. And the category weakness is also evident in the branded piece, which has also declined for you. So that would be a fair understanding, right?
Yes, Kunal. Because see, I'll tell you one thing. They are looking at their stocks. They're looking at that as an evaluation. Then the tariff overhang is one thing, and the other thing also as we go forward is again the economy might also be something that we will see a little slowdown.
Understood. That's clear. And the second bit is on the UK side. Any early interest that you are seeing which you can tap in the next 1 year or so? I mean, any large customers that you're looking at? I can understand you can't share the name, but any incremental interest that can help build those revenues out in the next year or two?
The answer is yes. Absolutely. Those conversations have started and very positive feedback for sure.
Understood.
Yeah.
That's all from my side. Thank you.
Thank you, Kunal. Thank you so much. Thank you.
Thank you. The next question comes from the line of Roshan from B&K Securities. Please go ahead.
Yeah, good evening. Thanks a lot for the opportunity. I just wanted to understand when is the new pillow facility likely to be operational?
It will start by Q4 of this year in Nevada.
Okay.
On the west. Yeah.
Okay, understood. And by when do you expect to reach the optimum utilization level?
See, it takes at least 6 months to 8 months to reach the optimum. Yeah, the second year will be the optimum optimization that you will start seeing because it takes that much time to scale up as well, right? Because every capacity can do around 10 to 12 million units of pillows.
Right, understood. And given what is the outlook on the festive season in the international markets? Because probably from Q2 your exports starts happening for the festive season. So what is the outlook over there? How are the buyers behaving? Or what is the overall mood? Maybe if you can help me understand that.
So this year it'll see every year Q2 comparatively to the Q1 is a little better. So that is the trend we will also witness. Now to that extent of what it will be in the terms of kind of a better off than the previous years, that is not something I will be able to say. But yes, it will be better than this year as well, this quarter as well.
Understood. Thank you. Thank you so much.
Thank you.
Thank you. Before we proceed with the next question, a reminder to all participants, you may press star and 1 to ask a question. The next question comes from the line of Bhavin Chheda from Enam Holdings. Please go ahead.
Good evening. I wanted to understand from the presentation what do you mean by effective capacity versus installed capacity?
In pillow, you mean?
Pillow also and flooring also because we keep on showing 2 numbers.
Yeah. So flooring we have built the capacity for 24 million meters, but we have operational 18 million. So there are some balancing equipments which we will have to set up at a very low capex, which will enhance the capacity as it may be needed.
Yeah.
For the pillow as well, the whole capacity is for the 2 shift operations. And also there are some automations which are still to come in. And so as they become operational, we will start reporting those. Currently it is only single shift operation. And there are another 20 to 30% automation still pending.
So, since we have also announced the new facility in pillow, so I am assuming this you will be ramping up first to the installed level, or there would remain a bottleneck to ramp this up?
No. That will, let me just explain the whole way that the pillow works and the pillow plants work in America. See, since it is logistically very, it's very heavy and cumbersome, so it is focused on that same zone. So now when we are in Ohio, it focuses on the East Coast, And that's where the distribution will happen with the DCs of the various retailers, right? And when the West Coast comes in, it's focused on the retailers on the West Coast, like the hospitality and the other major retailers as well. So that's the way it works, and that suffices that zone as well. So that's the way we work on actually. So that's the way the pillow works in America.
Sure, ma'am. So I should understand, so this pillow facility, though we are saying install 13.5 and effective 4.7 million PCs, there would be some automation and maybe double shift capacity you mentioned.
Yeah.
You also mentioned that each line normally is capable of doing 10 million pillows. So as and when the demand situation improves in East Coast of USA, this would be reaching volumes of closer to 10 million pieces, right?
Yes.
This Ohio facility?
Yes.
Okay.
Yes.
Already we have seen, from 30% to now 47% this quarter.
But 47 is of 4.7. Basically, I was 0.6 million is 2.5 million run rate. But what this facility can do. So maybe 3 years time, basically, once this tariff uncertainty gets over and the capacity gets ramped up, actually the ramp up is not very difficult in these kind of facilities. So maybe couple of years, this would be a 10 million output unit, right?
In 2 years max, but I think we already, by the end of this year and exit, we'll be at 70% of our capacity.
70% of again 4.7 or?
No, 4.7 will increase. So we will start second shift of operation as well. And so you will see a declogging of the effective capacity and also achieving higher capacity utilization of that.
Sure.
So, we are effectively vying for a double of last year's turnover in pillows, so 15 to 30 million. And hence, capacity utilization will ramp up very fast from here on.
Okay. My second question, I think you shared that non-US market was close to 40% of sales, right? That is non-US, non-India, or that includes India?
Includes India.
It includes India as well, because it's rest of the world.
Okay. And if you can share some growth in those markets, particularly UK, EU, if we can get some trends there?
So I think we can just give you a consolidated perspective right now, and I think this will continue to increase as a share and as the tariff, opportunity the agreements open up for India. Like UK, we already know that we are seeing opportunity. EU conversations are already happening, and retailers are very, very positive about that as an opportunity. Japan again is a great opportunity. So yes, and also Australia is done, but New Zealand is again right around the corner by the end of the year. So yes, those are the things that we will see. So I can just give you that perspective at the moment.
Okay, thank you.
Thank you.
Thank you. The next question comes from the line of Tanish from Antique Stock Broking. Please go ahead.
Thanks for the opportunity. Can you share the US and UK and EU revenues in terms of total revenue for this quarter?
So, Tanish, we don't share those revenues. So we are just, we can share the US and non-US share of the business, and that is all which we can share at the moment.
Okay, fine. Thanks.
Thank you. The next question comes from the line of Lakshmi Narayan from Kesema Wealth Private Limited. Please go ahead.
Hi, team. Are you able to hear me?
Yes.
So actually, in previous Concall, you have given net debt target would be around 0 by FY28. That still hold good?
Yes, correct. So we are trying for a zero net debt by financial year 28.
Yes.
Which is 3 years.
Yeah.
Yeah.
Okay. So my next question is on numbers basically. Could you give me the split of advanced textiles under the home textile segment? Is it possible? How much revenue it contributed?
We have given 117 crore revenue.
For this quarter, sir?
117 crore for this quarter.
Okay. Okay. FY25 also is possible for you to give? Last year?
You can get in touch with Salil. We will provide you the numbers. I don't have it currently.
Okay, sir. Thank you, sir. That's all from my side.
Yeah.
Thank you. The next follow-up question comes from the line of Kunal Shah from Jefferies. Please go ahead.
Yeah, hi. Thank you for the opportunity. In this B2B business, that 14-15% decline in revenues, possible to share a split of what that would be for, let's say, U.S. customers and non-U.S. customers? How much would that decline be for U.S., then decline or maybe some growth for non-U.S.?
Kunal, I think I can just tell you that the overhang of tariff is the reason for what you saw in the decline, and I think that's what I can just give you an answer on. Because the certain promotions were in the anticipation, and that actually got little postponed or little, So that's the reason I can just say that the tariff overhang was the reason here, and I think it's primarily United States.
Understood. But fair to say that the non-U.S. business would have grown YOY or?
Yeah. Yeah.
Understood. And second thing is with demand in the U.S. generally being weak, are you seeing increased competition both in the U.S. and let's say outside the U.S. as well? As partners like you would want to get volumes from other markets to compensate for the weakness in the U.S. Is there some sense on that front?
So we already are working with UK, Europe, and rest of the world, Kunal, and I think that's been a great opportunity for us. We continue to explore that for the long time as well, and now it actually will start seeing a lot of more fruition, positive, in the positive trend. So that's where it is. But also, Kunal, let me tell you that India still is in a decent position with the tariff situation as well, because if you look at the other peers as well. I can just say that we'll wait and watch, but India's position will not dilute to that extent.
Understood.
Yeah.
That's clear. Thank you for the opportunity.
Thank you.
Thank you. The next question comes from the line of Prerna Jhunjhunwala from Elara Securities. Please go ahead.
Thank you for the opportunity. I just wanted some color on the product-wise demand, if you can share, like bed versus bath, how the demand is, and any color which can, help us understand where the demand can really improve going forward. Maybe value versus premium, from where the demand is shaping up in current scenario.
So I'll tell you one thing. Right now, I can just say that, towels actually degrew this time, but we will see that again come up and ramp up again, Prerna. Sheets, so the towel had a mega drop, which we will see again come back next quarter and the others. Sheets was also down and the rugs were also down, but I think, Prerna, in the coming times, we'll see them gaining the share. And not only ramping up for America, but the other countries will also start ramping up in the terms of the demand as well. Let me just give you the perspective here.
Oh.
And at the towels also, you will see the beach season coming in. So there will be a ramp up for the jacquard and the fashion towels as well. So yes, that's where it is.
Okay. And our branded global revenues, combined online and offline, would not have declined much. So, is it decent to assume that branded piece is still seeing good demand, or is it more client acquisition and value segment or premium segment doing better in the branded segment? I mean, just trying to understand, branded is largely constant for us on a YY basis.
So overall branded portfolio is at 18% of the operating revenues right now. So, I mean,
okay.
They are, So they are around 18% of our top,
And you are right, Prerna. So overall branded portfolio has grown in single digit in the quarter and has not de-grown.
Yeah, so I just trying to understand whether that scenario continues, and what is driving this branded segment versus the decline in B2B, because at the end of the day, just trying to understand how, if we can further shape up this branded business faster, given we have much control on that.
So here actually, Prerna, because these are all brands like Creative Collabs and the others, so there are specific programs that come in and which we launch, and that actually does well in these times. And more so, Christie is continuing to grow as well. So yes, that's where we are seeing a contribution of the branded share not getting diluted comparatively globally.
And as we had from last quarter as well, so and we are informing this quarter as well. So there is a visible stock protection by the retailers because of the overhang of the tariff. And hence, though the demand at the customer end has not gone down to that extent, the buying has. And hence you see it to be a lower volume rather in the branded segment, which is remaining good.
Understood. So this is really helpful. Thank you and all the best once again. Thank you.
Thank you. Thank you.
Thank you. Ladies and gentlemen, we'll take this as the last question for today. I would now like to hand the conference over to Ms. Dipali Goenka for closing comments.
Thank you. So as we close Q1 and look ahead, it is clear that FY26 has begun amidst significant external headwinds. The implementation of reciprocal tariffs has added layers of complexity to an already dynamic global trade environment. While near-term volatility is inevitable, we see this period as one that will separate the resilience from the rest. We are actively engaging with our customers and stakeholders to navigate these uncertainties. At the same time, we remain focused on what is within our control, driving operational efficiency, optimizing costs, and staying close to market shifts to respond with agility. The India-UK Free Trade Agreement, once fully implemented, holds strong promise of expanding our reach and competitiveness in the UK market. And similarly, progress in the US-India bilateral trade agreement remains an important milestone, and we are awaiting outcome to gain more predictability in trade flows. We remain deeply committed to creating sustainable value for our stakeholders through prudent action, disciplined execution, and a trusted partnerships across the markets. Thank you all for your continued confidence in Welspun Living. We look forward to updating you as we move ahead. And for any further queries, please feel free to connect with our investor relations team.
Thank you. On behalf of JM Financial Institutional Securities Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.